Hi, welcome to this tutorial with Patrick. I'm going to run through getting a virtual account through the Chicago Board of Options Exchange website. So we can see here that I'm on the website and it is CBOE.com. Just .com actually, so CBOE.com. And in order to get the virtual trading account, what we're going to do is go to Tools, and then we're going to go to virtual trade. So just click on virtual trade there. Okay, so now we've got this screen. Just see here that all we need to do is register. So I'm just going to click there and I'm going to register with CBOE. So hopefully in a couple of seconds it'll come up, and there we go. So I'm just going to pause the recording now and fill this out. And we're back. So I've just filled that all out there. And it says here, yes, I would like to receive email updates. Well, I just uncheck that so we don't get too much spam, and let's just move on. So I've registered there, and here we go to the next page. Oops, okay, need to click that I'm okay with the terms and conditions, and here we go to the next page now. And here we go to the next page, and it's saying what do we want to subscribe to. Now I don't want to subscribe to anything because I just want to make sure that I don't receive lots of aggressive marketing. So I'm just going to click nothing and save the settings. Okay. So here we are. So now we should be able to start with our trading tool. So see, it says click here and click here. And we're in the virtual trading area. Up pops our terms and conditions, so read that thoroughly and then click here, I agree. Cool, okay. So it starts us out with a $25,000 account, and we've actually got margin lending on this account. So what that means is that if this was a real account, we've put $25,000 in there, and they're prepared to lend us up to $25,000 in order to buy stock. So we've actually got double our buying power. Or to put it another way, we've got a margin loan with a 50% loan to value ratio. So if we spent all our money, we'd have $100,000 worth of stock, we'd have $50,000 of our own money and $50,000 as a loan, so that's a 50% loan to value ratio. Now, for most of you, what you'll be using this for is to learn share renting. So let's have a look at how we're going to get into a share renting trade. So what we're going to do is we're going to go up here, and with share renting, it's a covered call, as we know. So we can just choose covered call right there. And up comes our trade ticket. Now, you can do a standard covered call. A standard covered call is where we buy the share. So you put the share in there, the name of the share, and then we sell the call option. Okay, the call option is the rental contract under the concept of share renting. Or we could just buy a put, or we could do both. So what I'm going to do for safety in the market is I'm going to do both. Now you'll see here that because it's a free service, there's quite a bit of advertising on the side there. You just need to scroll across to make sure that you can see everything. Now just here we see that we can adjust our virtual funds and trading level. So if you wanted to take a lot of different trades so that you can have a lot of practice, you might want to raise that level. Or if you just want to use the amount of money that you think you'll have. So let's say you only were going to have $10,000, then you could go here and subtract $15,000 from there. Now you can see here that also we've got our trading level. So if I click here, that we've got trading level 1, which is just basically buying and selling stocks or shares. Level 2 is covered calls. Now, level 3 is just buying the call or put options without having bought the shares, and that's so that we can trade speculatively. So, if we want to speculate and buy a call or a put option in the expectation that it's going to go up, then we can go to level 3. Um, and well, when we like I said, if we bought a put option, we would expect the market was going to drop, and or the share that we'd bought the put over was going to drop. Then the value of the put's going to go up. Likewise, if we buy a call option, what we're hoping is that we're going to buy the call option, the share's going to go up, and we're going to make a big profit because we only have to put up a small percentage of the cost of the share in order to buy the call option, but we participate in most of the upside and most of the dollar value of the upside. And then we've got spreads and we've got naked puts and so forth, which I'm not going to go into in this video. But anyway, you can play around with that to your heart's content, because it's virtual trading. It's not going to lose you any real money, and you can always reset it if you make some crazy errors. However, what I would encourage you to do is to treat this, with some seriousness, and treat it as the learning tool that is it's designed to be. So I just clicked on collar there. Now, collar means buy the stock, sell the call option, and also buy the put option. So the call option's our rental, the put option's our insurance. Now, what I'm going to do is I'm going to type in LVS, just random stock that came into my head, just to give you an idea. Now, LVS, it stands for Las Vegas Sands, and that's a resort. And we can see there that Las Vegas Sands is recently traded at $45.79 bid and $45.95 ask, and the last it traded at is about $45.84. So when the market opens, I'm expecting it to be able to buy it at around about that $45.80-$90 mark. So the market's closed at the moment, but I can put it in a market order for when it opens. So what I'm going to do is I'm going to buy the stock. Now I'm going to buy 300. Why am I buying 300? Well, I want to be able to diversify. I've got $50,000 worth of buying power. 3 times 5 is going to be 15, so it's about $14,000, which is going to mean that I'm going to be able to place, 3 or 4 trades around about that point. Okay. So now I'm going to find the option chain. So I'm going to type in the stock symbol again, and I'm clicking on find chain. Chain means all the different options that are available for that stock. Now, it's only 2 days to expiration for October at the moment, so there's no point in me really going to that. So I'm going to go to November, and I've clicked on November there, and just make this a bit bigger so we can see what's going on. Now, in the real Options Express platform, there's a bit more information here, but this is enough for us to go by. So we see that was the last price there, and what I'm going to do is I'm going to look for the call option, the next call option that is above the current price, which is 46. Now you can see there it's in the white section, and the yellow section means it's below the current price, the option strike price. These are the strike prices, or the exercise prices, and you would have seen some of that information explained to you in the home study. So these are the exercise prices here. $46 is what I'm going for, which is returning $1.86 per share. And because there are 300 shares, I need to have a quantity of 3, because there are 100 shares per contract. 300 shares rather equals 3 contracts. Now, I'm just scrolling across here, and we can see there that is the approximate price around about that $1.87 mark. Now, what's this down here? This is the net price that we're paying for the stock. So that's the current share price less the option price, the call option price. The reason why we've got, they've got that quoted is because that's our net cost, because we're receiving some income as well as we're putting out some money into the market. Now, I also want to figure out which put option I'm going to buy, which is going to protect me. Now, I'm going to just do the simple thing of just buying a one put option for each call option that I've got in place, or for one contract for every 100 shares. There are other strategies where you might not have the exact same, but for this strategy we're going to. Oops. Okay, so LVS, and we're going to find the chain once again. So here I am going once again to November, because we want to make sure we're going in the correct month. And I can see here that I'm currently trading, so I want to protect myself, but I don't want to spend too much money on the insurance, or I'm not going to make any profit. So I'm taking it down to the $42. Okay, so I'm risking basically $4 per share, nearly, less the income that I'm going to receive. So I'm risking around about $3 something per share. If things go disastrously wrong and it drops down to, say, $30 or something like that, I can always sell it for 42. That's my insurance policy. I'm not intending for that to happen. In fact, my intention is for it to stay up and be exercised at 46. But if it goes down, I'm protected. So what I'm going to do there is I'm just going to click on that one, and that's pre-populated that into the trading pad. And once again, of course, we're doing 3 contracts. Now, I'm not going to try to pick a particular price that I want. I'm happy just to take the market price. So whatever the price is when the market opens, that's what I'll get filled at. Now, if you want to, you can set a limit, but for beginners, sometimes you won't get your order filled if you choose the wrong price, and it sort of helps to be available when the market's actually open to check back in to make sure that you got filled on the order. So we're just going to do market. We can certainly talk about limit orders at another stage. The day order, that's how long the order is going to be in the market for. It only needs to be in there for a day, because it's going to get filled straight away anyway at market. So I'm clicking preview order, and that should bring up, there. Okay, so there's our previewing our order. So I can see here that this is my order that's going to go to the market, and it's costing around about $13,500, about that 14,000 mark that I was looking for. Okay, so now if I look up here, I can see that the difference between my insurance policy and my rental, or my put option and my call option, is around about $1.20. So my net, if this trade works for me, then my net profit's going to be $1.20 plus any upside. So if it goes up to 46 from $45.84, I'll make another 15 cents. But let's work it out and see what sort of profit percentage I'm going to be making on this one. So I'm just going to get the calculator up. Alright, so we can see the calculator there. So in order to work out my percentage return, I'm taking that $1.20, 1.2, that's an approximate profit for us, net profit, and I'm going to divide that by the price that we're purchasing it for, divided by 45.84. That's going to give me a number multiplied by 100 is a 2.6% return. So that's a nice conservative return of 2.6% for the month with protection. Now, if I decided that I didn't want, that I was confident the market was, going to go up, or this share was going to go up, more bullish, then what I could possibly do is not have the insurance policy in place. Let's see what it would be if I didn't have that. So 1.87 divided by 45.84 equals about 4%, 4.079%. So it's up to you, but when starting out, I would normally have that insurance policy in place. Just it's a disaster prevention policy, and still 2.6% for the month. It's not, it's probably better than anybody's bank account or any other investment. If we look at that, 2.6 times 12, that takes us to about 30% return for the year if we could consistently get that. So that's not too bad. All right, so if I place this order to the market, we can see that it's been placed. We can check our order status. So I'm checking on the status, and it's yet to be filled. So when the market opens, that will be executed. It'll be filled at a certain price, and I can check in with that. But for now, that's all I need to do. So, I can click here. Actually, if I click on this plus button, it shows me the different elements of the trade. So in this collar, we've got the share, the call, the put, the approximate price, and so forth. You can check on all of that. And when this is executed, we can come back and we can have a look and see what's gone on. Possibly place another trade tomorrow. Okay, thanks so much. Hope you enjoyed that. Bye.